So, in the midst of this demand collapse and the reduction in production and the price reductions, where does this leave the shale boom out in particularly out in the Permian Basin? Some people are saying it's the end of the shale boom, and it's very important for you to understand that doesn't mean the end of the Permian. It just means when we say boom, it means the end of the explosive growth. Just like companies like Uber and Lyft and Airbnb were rewarded for growing market share, even though they were losing lots of money. A lot of E&P companies were rewarded for growing their production over their profits. And you had these equity investors that were willing to keep putting money into companies because they kept drilling good wells and expanding. There were plenty of people that were telling me for the past 3 or 4 years that they couldn't see how the companies could keep drilling at the rate they were because they didn't think the prices were going to be high enough to make those wells profitable. But when you have investors that are willing to pump money in, this is what you get. A lot of wells that today, well, we'll talk about where the picture is going to be as we go forward. That mindset of production over profits really started to swing probably about 2 years ago. So the shale boom had already started to slow down quite a bit as companies were being more cautious about where they drilled their wells, and they were trying to increase the free cash flow that they could give back to the investors. Part of that was by requirement, if you will, or by demand, because the equity markets over the past couple of years have largely been closed to E&P companies. Public investors are shying away from the oil and gas industry in general, and private equity for about the past 2 years has really reduced the amount of money that they were putting in. They were very selective. So now you take this picture where the equity investment has decreased or gone away. You've got a lot of wells that were drilled assuming or hoping for prices that probably were never realistic. And you've taken on a lot of debt from banks as you've drilled these wells. You've borrowed against your reserves. And now you're looking at $40 a barrel oil, and you can't even ship as much as you would want to because you've cut your production. And a lot of E&P companies find themselves where they cannot service their debt, or they can't even pay their bills. And because of that, Chapter 11 bankruptcies are mounting. I hope that you'll learn more in the MBA program about the difference between Chapter 11 and Chapter 7 bankruptcies. But the key thing is, in a Chapter 11 bankruptcy, you're not just closing up shop and going home. You're trying to restructure to allow operations to continue. And what will happen is, in a Chapter 11, often the equities investors get wiped out, and the debt holders get paid some, if not all, of their money. And sure enough, this is just the 2020 bankruptcies. And depending on how you count, you can come up with 42 companies, you can come up with 34 companies, because some would argue that this isn't correct. And I'm not looking for you to see any of these names. But if you read down here in this very funny thing, $20 billion is the valuation of the outstanding obligations in 2020 so far, and that rivals 2016 total. And if that's not bad enough, those are to-date bankruptcies. People are forecasting that there are a lot more bankruptcies. This company, Rystad Energy, just put out a report where they expect 150 more bankruptcies before the end of 2022. They say if oil goes to $30 a barrel, this is how many bankruptcies you'll see. If oil stays in the $40 a barrel range, this is how many bankruptcies that you'll see. And that's what these numbers over here reflect. It sounds like gloom and doom, but in an odd sort of way, when you see destruction, when you see a bankruptcy, other companies see opportunity. There actually are a lot of opportunities, going to be a lot of opportunities in the E&P industry in the years to come. And when we come into class, Mark Carter is going to tell you about how his company, Burke Royalty, is capitalizing on some of the opportunities that these bankruptcies are creating. I look forward to the discussion, and I hope that you have got a good sense now of the industry as a whole and the dynamics that are shaping the industry today.